for the first episode, which is the Energy Transition Supercharged, I'm delighted to be joined today by Kingsmill Bond. Kingsmill is a senior principal in the Strategic Analysis and Engagement Group at the Rocky Mountain Institute, and his role is to write research on the energy transition and the fundamental consequences that cheap, abundant, clean energy will have on financial markets and the wider economy. He previously worked at Carbon Tracker as the energy strategist, and prior to that was a sell-side city equity analyst, where he works at investment banks in London, Hong Kong and Moscow. So, Kingsmill, first question I'd like to discuss with you is fossil fuels. We all know that we need to reduce fossil fuel usage to meet our climate objectives, but last year we saw oil and gas firms making record profits. Where can we expect to see the future of fossil fuels? When can we expect to see a peak in fossil fuel usage?
So the record fossil fuel profits last year is the result of Putin's invasion of Ukraine and the removal of a certain percentage of the system. And in fact, it will speed up change. But the story is very, very clear. We've already seen peak fossil fuels in 2019. And in fact, this is not so radical an observation as it might at first appear. The numbers are pretty simple. Global energy demand in broad terms about 600 exajoules. Solar and wind is about 30 exajoules if we use the BP method of counting. It's growing at about 20%. It's about 6 exajoules of growth, and global demand's also growing at about 1%, 6 exajoules. So it's actually mathematically quite clear that these new energy technologies are taking all of the growth, which means, therefore, by definition, peak fossil fuels. The driver of this extraordinary shift and this peaking of fossil fuels is this exponential growth of new energy technologies of solar and wind. And we can expect that to continue throughout the course of this decade, such that by 2030, solar and wind, which today just about take the growth, will very clearly be taking all of the growth and pushing down fossil fuel demand. And I think the other point is, because people often find this a little bit surprising, this transition, this peaking moment for fossil fuels has been coming for a while. So back in 2019, renewables or non-fossils were already supplying 85% of the growth in energy demand. In the period of the crash and recovery in 2020 and 21, non-fossil energy sources supplied all of the growth already in that period. And because they just keep on getting bigger, the maths just keeps on getting considerably easier.
Got it. Okay. So then if we think, just focusing on fossil fuel usage and demand for now, I think we were kind of talking before Ukraine, and certainly kind of during COVID, when we saw fossil fuel prices dramatically decrease. We had that time when we had negative oil prices at one point. And a lot of people then were talking about how we had reached fossil fuel usage. Ukraine, as you just touched on, did seem to slightly kind of change perspective, but it feels like we're sort of at a point where fossil fuel usage is kind of bumping around a bit, but we're not seeing a dramatic kind of decline. But that seems to be what you're suggesting, is that we could be going towards a period when that decline happens more rapidly.
So one of the things we did at RMI is we looked at a series of transitions in other sectors. So famously, you have horses to cars, you have steam sailing ships to steamships, all these other transitions which have happened, and you get this very clear pattern of a peak and then a plateau for a few years, and we'll come back to what a few is, but generally between 2 and 10 years you're going to get a plateau, and then you get a very, very clear decline. And the reason why you get this pattern is simply because of the maths of the way it works. It takes time for new energy technologies, or any new technology, to move up the S-curve, to move from being tiny to being dominant. And yeah, so coming back therefore to fossil fuels, I think you're right. We've seen a peak in 2019, we're kind of bouncing along the plateau right now. It fell in 2020, bounced back in 2021, will kind of be around the same level here in 2022, and then fall again in 2023, probably bounce up a bit in 2024. But we have kind of a 5-year plateau in our framing, and then after about the middle of the 2020s, you then get a picture where these new energy technologies are big enough to really start driving and pushing fossil fuels out of the system.
I love this analogy, the historical analogy of the horses and carts on the one hand versus motor carts on the other, and motor cars. And I can see in that kind of initial period when the first cars started coming on the road and the early adopters were probably seen as kind of cranks or whatever. And there was a period of time when there was a small number of cars, and then quite rapidly, when the advantages of that technology became apparent, then you started to see this shift.
Yeah, exactly. Well, as you know, famously, the cars used to have to walk with a man walking in front of them with a red flag, just in case they upset the horses. But actually, let's take this as a good example. So electric vehicles. So people often say, well, there's 1,000 million cars on the roads and there's only 10 million electric vehicles. That's irrelevant and tiny. It's a drop in the ocean. This was the kind of standard argument, certainly a few years ago. But you've got to distinguish between stocks and flows. So what happens, first of all, in any new technology is that it dominates the flows. That is to say, the new stuff, the new car sales. And what's been happening with electric vehicles is they're moving up these exponential growth curves called S-curves. And we see this very clearly in the UK. They've gone from being 1% of sales to now 25% of sales. And they're heading, if we follow in the footsteps of Norway and Sweden, which I think we are, and China, which I think we are, will be close to 100% of sales, certainly by the middle of the next decade and probably by the end of this decade. And then, so that's your flow. Once your flow is all new energy technologies, electric vehicles in this case, then it only takes 15 years for the entire stock to change. And we're kind of starting to see this on the streets of London. You see increasing numbers of Teslas and electric vehicles knocking round. And yeah, in 10 years' time, I think it'd be hard pressed to see ICE cars in certain key cities in the UK.
That's fascinating. So then to summarise what you're saying in terms of like how you would see those two rates of change, so flows on the one hand and stocks on the other, you would see a ramp up in the graph of flows to start with, and then a lag before you see that then the cycling through on the stock and the stock changing from one to the other.
Yes, and to substantiate this, it's now widely accepted that we saw peak sales of conventional ICE cars in 2017. So that peak is actually already behind us. If we then look at, and apply that framing to the electricity sector, you see that actually peak deployment of fossil fuel stations for electricity generation was 2015. And now, when I look at the flows, that is to say the flow of new deployment of generation stations, 90% now are solar and wind and other renewable technologies, 90%. The IEA forecasts 90% over the next 5 years. So we're basically already there at the moment where all of the flows of new electricity generators already are renewables. People, I don't think, recognise how far we have already come.
That is absolutely amazing, isn't it? And I think it's probably easier in some ways for people to think first of all about the electric vehicle adoption rate, because obviously we see cars all around us, we're all aware, we're making decisions about cars that we buy ourselves. And then the electricity sector is something that's a little bit more, I guess, opaque to most of us. We don't see where our power comes from. But I guess then to put some more flesh on the bones of what you're talking about with electric vehicles in terms of how things become self-fulfilling. So I think what you're saying is that when the flows change and sales start to tilt more towards electric vehicles, we as consumers might not initially see that, because what we see is the stock. We look around and we see cars on the street, and it might be 2-3% are electric vehicles still, but in fact the sales on an annual basis are switching, and therefore fundamentally what's changing is that the automobile manufacturers themselves, in the meantime, they've completely changed their perspective on things and how they look at the future, and therefore it becomes inevitable that that we get more electric vehicles coming onto the roads.
Exactly, and I think this is why when I bring a financial market perspective to the debate, so manufacturers see the change happening, and the conventional manufacturers of normal cars, as the share price of Tesla went through the roof, began to realise that actually the future was electric vehicles, and they therefore had to retool their entire businesses long before the stock of electric vehicles changed, and even before they were getting a very substantial share of the flow of the sales. And the reason why is because they saw prices falling for batteries, and they realized that there was increasing regulatory pressure coming, and therefore the future was electric vehicles. And then what happens with financial markets is we're quite good at spreadsheets, right? Just like you guys. So once you figured out where the flow is going, you can then put it in your spreadsheet, and you can figure out what's going to happen to the stock. And it's ultimately, for example, it's a stock of cars which determines the amount of oil that's required to drive them, and it's becoming increasingly obvious, and even the IEA, for example, has now made this call of peak demand for oil for cars, or petrol for cars, petrol and diesel for cars being in 2019, precisely because of this dynamic. You're getting efficiency coming through, and you're also getting these electric vehicles coming through, which is quite quickly driving peaking demand. Then you have this kind of plateau for a while, and then it falls off a cliff.
Exactly. That's fascinating. And you've touched a couple of times on the concept of S-curves there. So I just want to kind of dig into that for a minute, just so we can talk about exactly what an S-curve is and what it looks like.
So S-curves are extremely familiar technology to all of us in our daily lives. So if we were to go back 20, 25 years ago, we didn't have mobile phones, and then we had a few early adopters, wealthier people buying expensive mobile phones, and then prices came down, and suddenly you went from 1 or 2% to 5%, and then the glory of an S-curve is you go from 5% penetration to 80% penetration extremely quickly, in the case of mobile phones in different countries, within 5 to 10 years. And then you had a slowdown at the end when you have laggards and late adopters. But the point simply is that it takes about as long to go from being a niche technology, which is not much used, to get to about a market share of call it 5%, as it does to go from 5 to 80. And what's so exciting about the energy transition is there are so many technologies which are just at that 5% level going to 80 extremely quickly. And sorry, the other point I would make is it's not just in mobile phones, it's actually a phenomenon you see right across the 20th century in colour televisions and VCRs, and you also see it in infrastructure, again to people's surprise, the deployment of railways, the deployment of canals, of roads. There seems to be a fairly clear rule of thumb. Once humanity figures out there's a superior technology and costs get low enough, we deploy it, and we deploy it very fast. And that's now happening in the energy system. And sorry, the other point is, this seems so obvious to us, but is not obvious to energy sector participants, or most of them. And the reason why is because the energy sector has not been disrupted in 150 years. And therefore there's no kind of recognition that new stuff could grow fast enough to provide the disruption that we're seeing.
That's right, exactly. So the energy system itself has just been in a kind of stasis sort of since inception, since the whole concept of electricity grids were born 100 plus years ago. And it's not something that we as just general citizens are particularly aware of in terms of the indicators that are there in terms of radical change that is coming down the pipe in the next few years.
Yeah, actually, just if I may, I'll take this opportunity. Often I have people say to me, well, we can't possibly deploy solar and wind and more grids at scale because it's too difficult, can't be done, and we can't get the permitting and this, that and the other. And I think one important thing to do is to go back to 1900 and say, well, look, in 1900, the world generated about 7 terawatt hours of electricity. In London, we had in a relatively small number of cities, London, Chicago, and various other cities, and they were expensive and dangerous, and they kept on going on fire, and they're very inefficient, and we had wires strung up all over this. Anyway, the point is, back in 1900, it was not a good system. And if you'd said to somebody 120 years later, we'll be producing 28,000 terawatt hours and selling it to 7 billion people using 75 million kilometers of cable, including subsea cables, you would have been laughed out of court. But the point is, it happened. It happened then, and it was completely new. now what we're doing, the ask on us now, with all due respect, is considerably easier. We already have a system. We need to retool it and improve it. We need to increase the size of the grids. We need to continue to roll out solar and wind quickly, as we have been doing for a while. So in fact, I would suggest that the kind of impediments to change, the barriers to change that people are talking about, whilst they're very real, they're by no means insoluble.
So, Kingsmill, this is really interesting in terms of your perspectives on the progress that we're making with renewable energy, and it's been great to see that. People will point out, though, that renewable energy still represents a minority of overall generation in terms of the energy that we're using on grids across the world today. They have required huge amounts of government subsidies over the last decade plus, and will always be inherently inferior to the liquid gold that is oil and gas. As we get more wind and solar on the system, energy grids are going to fall over. They're going to be stressed because the wind doesn't always blow and the sun doesn't always shine.
So let me address all of these issues. I think to start off, fossil fuels undoubtedly rescued humanity from the Malthusian trap after 1800 and enabled us to build this society that we have today. There is no question. They have been brilliant, but they've also run out of room, and we can no longer continue to burn them with impunity because of global warming. Again, we all understand this. But in fact, I take exception to the idea that fossil fuels are in any way inherently superior to renewables, and give you a few observations. First of all, fossil fuels are located in a very small number of locations. The fancy word is punctiform, and not many people have them, and you get out the cheapest stuff first. And in fact, interestingly enough, research at Oxford by Doyne Farmer and others has shown that the cost of extraction of fossil fuels over time doesn't fall, because you have this kind of technology driving down costs, but also you run out of the cheap stuff. So, and furthermore, fossil fuels, you're losing 2/3 of the energy when you burn them, even more if you're burning them in vehicles, and they create pollution, which tragically is responsible for the deaths of 8 million people a year, according to various statistics. And so it's not as if fossil fuels are a panacea in and of themselves. There are issues with them. And then they face this extraordinary new, it's not new, of course, the sun's been shining for a while, but humanity within the last 5 years has crossed various bridges, cost bridges, and liberated this new energy resource. And to give you a sense of how big it is, renewable energy potential is, even if you were to constrain very heavily where you could deploy it, is 6,600 terawatt hours. Put that in context, global energy, which is 100 times as much as fossil fuels in broad terms. So we've discovered how to exploit this extraordinary, enormous resource, which is obviously everywhere. Now, you're quite right to say that it is variable, but the variability is just one of many problems that we need to resolve, and we are doing so. So there's lots of solutions to the variability, as you know, of solar and wind. They include demand side management, supply side management, grids, and overbuild, and also increasingly the intelligent use of hydro and the intelligent use of batteries, and now increasingly, as you know, solar farms are being built with batteries attached in order to cope with the variability. And it used to be said 20 years ago that they could never reach more than 2% of the system. Wonderful quotes from the German and Irish grid operators saying that the entire system will collapse. And now, of course, as we all know, they've reached more than 50% in various leading countries and jurisdictions, Northern Germany and Denmark and Southern Australia. And in many places, people are planning to get them to 100%. So it is in fact a misnomer to suggest that the variability of solar and wind is a blockage to their continued deployment. And sorry, if I may want a final general point as a kind of strategist. Solar and wind currently provide 12% of even the skeptics would acknowledge that they can provide around 30% of the system, and indeed with various technology fixes, they can get up to about 70% without actually costs significantly increasing. Above 70%, costs do start to increase, and we're kind of trying to figure out how to get them lower. But the point to me is that the world is at 12. We should worry today about how to solve the final piece, but it's not going to stop the change from happening. And this again is when I put my financial market hat on. If you own a share and it's selling 100 widgets, you're selling 100 widgets, and somebody says to you, well, demand's going to go from 100 down to 20, but you're fine for the last 20. You don't wait to sell the stock. When it's at 20, you sell it at 100. You sell at the top because you think, right, decline is coming. It's inevitable. There's going to be overcapacity. There'll be declining demand, and that's precisely the kind of future that's now facing the fossil fuel system. And we should not, therefore, ignore the problems that we face in the deployment of renewable energy technologies, but it's also then none of these problems is sufficient to stop the change that we're seeing.
I think you've made three really important points there about clean energy. I think also a clear message coming out from that is that if you're looking at investing in energy infrastructure, you have choices between old-fashioned, inefficient, dirty fossil infrastructure or advanced, efficient, clean energy infrastructure, and that presents an interesting investment opportunity, which I'll come on to in a second. I just want to repeat what I picked up as the three key messages there. First of all, we have abundant renewable resources, far more than we need, and therefore it is entirely possible for us to move to a system where we're essentially utilising the energy that is moving around the world at any one moment in time, rather than digging energy up and burning stuff and putting it in the atmosphere. And having a system which is deeply decarbonised with high amounts of wind and solar is entirely possible with all the technology we already have. That's the first point. Second point is the fundamental efficiencies of renewable energy. Using wind or solar to produce electricity without burning stuff is actually fundamentally much more efficient than burning stuff and using fossil fuels where there's leakage throughout the system. And I think that's something that people don't often appreciate. And I know there's been work from Carbon Tracker around that in terms of the efficiency of electric vehicles, for example. And then the third point is just the other benefits of renewable energy in terms of health benefits. Renewable energy is much quicker to build than fossil fuels. So I think there's all these other points that maybe aren't properly appreciated.
Yes, and I think increasingly also people are bringing into the debate justice. The point is that fossil fuel energy is controlled by a relatively small number of petrostates and oligarchs. They generate up to $2,000 billion a year of unearned profit, rent it's called. And as things stand, 10% of the world is using 50% of the energy. So we actually have a profoundly unjust system as things currently stand. And then suddenly we have this technology which is distributed everywhere. Everyone can generate it. Everyone can use it. You can't generate any super profits for long because there's lots of competition. It's an industrial good. And therefore it's profoundly, there are profound issues of distributional justice in enabling this technology to become predominant.
Yes, absolutely, and I think that's such another important point about how we think about the world in the future, based on renewable energy and the kind of geopolitical consequences of that. That obviously countries anywhere can tick all the boxes of cheap energy, decarbonised energy, and secure energy using their own renewable energy resources.
So, I mean, people used to talk about the energy trilemma, and in fact, there are still various dinosaurs in the system talking about it. And the trilemma used to be security, cost, and the environment. And the idea was that fossil fuels did some of this and renewables did some of it, but actually now. And in large part because of Putin, the energy trilemma is solved. Renewables are cheaper, they're secure because they're local by definition, and of course they're far superior for the environment. So actually we need to move on from that debate. And really the question now is not should we do this or will it happen? It's just how do we do it best? That's the point.
Got it, exactly. And I for one, have learned a new word there when you were talking earlier. So punctiform. I'm going to be using that on a regular basis now.
A flash word.
A flash word. And which way round is that? Punctiform, is a measure of how concentrated resources are punctiform?
Well, it's if you think about doing little dots or points on a map, that's where your coal or oil deposits are. Not very many places. That's the technical definition.
Got it.
Not
so they're very punctiform, are they?
Yeah, right. But if you think about it, right, you don't have oil wells in central London, do you?
No.
But you do have sunshine.
Yes.
So, and the same argument applies everywhere. Distributed versus punctiform.
Got it. Excellent. Well, I'll be using that word as much as I can in the future. So just in terms then of indicators of where we are with the energy transition, how can we quantify this in terms of the progress that's being made?
So there really are kind of, if I frame this, there's kind of 4 key moments in this, or indeed any transition. You have, so if you think about the new stuff, you have it's building up and it's testing and costs are falling and it's expensive and it needs subsidy and it doesn't quite work that well. That's kind of stage 1. And then stage 2 is once it crosses a tipping point, it goes very, very quickly up this S-curve we talked about and then starts to push out demand for the old stuff. And then, actually, I'm going to have a 3-part framing here. And then the third part is kind of when it overtakes the old energy technology, and that's the end game. And a lot of the counter arguments we hear from people at the moment about the current system is they're talking about the end game. They're basically saying, we're not going to wake up until we've lost half of our market share and half the world has changed. We're going to concentrate on the last problems. Václav Smil, for example, is an absolutely shameless proponent of this fake argument. We can't solve petchem, we can't solve agriculture, agricultural machinery, and therefore there's no transition. Well, from our perspective, that's just an endgame problem. It's absolutely irrelevant to the transition that's happening right now. So let me give you a few pointers to and proof points for this for this observation. So for this framing. So the key point is that as you switch from the sort of initial stages to the S-curve, you get a peak of the old system. So we should be seeing peaking demand for fossil fuels right across the energy system, and indeed we are seeing that. So in the OECD, so in England, the US, and Japan, fossil fuel demand actually peaked 15 years ago, 16 years ago, back in 2007. And has been declining quietly ever since then as a result of efficiency gains and the rise of renewables. And then you're now starting, so you saw, as I mentioned earlier, you saw peak ICE car demand back in 2017, peak coal demand in 2014, been bouncing on a plateau, famously might get back to its 2014 levels in 2022, but that's kind of still, nevertheless, a plateau prior to the decline. So in terms of the volume, we're undoubtedly starting to see a series of peaks taking place. So we just put out a report this morning talking about peak fossil fuels and electricity demand being in 2021, peak fossil fuels in industrial demand, ex-feedstock is 2017. So you are seeing very, very clear examples of peaking demand for the old system. You're also seeing indisputably S-curves of growth for the new stuff. So in 2022, the deployment of solar panels, if I take the BNEF statistics, was up by 50%. Now this is incredible because it's a huge industry and it's been growing for a long time at sort of, well, it was growing at 100%, then it fell to 50, and then it fell to about 25. And then in the middle of that, to have a 50% growth is quite extraordinary. But the point simply is that you continue to get very rapid growth of solar. Last year was 60% growth of electric vehicle sales, and we're getting hundreds of percentage because it's early stage, of growth points of deployment of hydrogen. These are all, I would suggest, proof points of these technologies moving up S-curves and the old system kind of peaking and starting to decline, which is precisely how our framework is structured.
That's fascinating, and that's very compelling in terms of putting the data points around the progress we're making. And I think another point that's coming out of what you're saying is the interaction between the building out of renewable energy and then the kind of feedback loops with the wider economy in terms of things that enables. So new economic sectors that emerge wrapped around cheap, abundant renewable energy coming at various points. And in a way, that's a bit like the analogue you talked about earlier with the emergence of the motor car. The motor car helped to build itself. The internal combustion engine enabled the building of roads. Roads were required, factories were required to build the cars. And as a result, the new technology not only took over the market, but it made the market itself much bigger.
Yes, and we're seeing precisely that. So you will now see a shift of high energy consuming industries to areas of cheap renewable production, and you're already starting to see this with Andrew Forrest, for example, in Australia, and his plans to produce green steel, produce iron ore, and green hydrogen turning into green steel, and then you're likely therefore to see major industrial shifts taking place. And this is incidentally another reason why people find this so hard to analyze in detail, because these are very detailed, complex areas, industrial shifts, and that's why sometimes it's quite helpful to have this kind of strategic perspective and just say, look, we can't model this in very, very fine detail, but we can see the broad picture of what's going on, that cheap energy, precisely as you say, creates a different paradigm, and industries will shift, countries and populations will also shift as a result of this change.
Exactly, that's fascinating. What I'd like to finish on then is just a brief then kind of discussion about, having talked about that market context, when we're thinking about investments in infrastructure, whether we're mobilising private sector capital, public sector capital, whether it's people themselves thinking about how they invest. If we're thinking about the new assets that will be built in the coming years, the comparison between clean energy investments and fossil fuel investments, assuming these are big infrastructure projects that will be 20 plus years in life, how should people be thinking about the risk and return profile of fossil assets versus renewables?
So if we take, to put some numbers on this, if we take the framing of capital being deployed in the energy system, and I take statistics from Rystad from their central scenario, in broad terms, there's $30 trillion of fossil fuel infrastructure and $5 trillion of renewable infrastructure today. That 30 is going to zero, and the 5 is going to 25 or 30. So the point, therefore, simply is, if you are thinking about an infrastructure investment over any serious time period, and of course they must be, if you're investing in fossil fuels, you're investing in an industry on the peak of catastrophic decline. If you're investing in renewables, you're investing in an industry which is already undergoing spectacular exponential growth. Now, it's not to say for a second that it's going to be easy or that everyone will succeed, but nevertheless, it's two very different paradigms.
That's fascinating. Kingsmill, is there anything else you would like to say, any other messages you would like to convey regarding the energy transition?
The key point we would make is that this shift will become increasingly apparent during the course of this decade. This, therefore, is the disruption decade of the 2020s, and companies which greenwash and have fake strategies will fail. It's companies which realize what's going on, retool their businesses, recognize, as people did in the 2000s, the impact of the rise of the internet. Now it's the impact of the rise of new energy technologies, and retool their businesses for this new environment. They'll be the ones that succeed.
Exactly, that's fascinating. Well, thank you so much for the discussion. I've really enjoyed it. I've really appreciated it. I think you've made some really fundamental points there, and I hope that the key points people take from this is that the energy transition is happening and will happen much quicker than people expect, that there's self-fulfilling feedback loops within that will perpetuate and accelerate the shift, and most importantly, that there are fundamental implications for financial markets and the broader economy that we might not yet appreciate. So thank you very much for your time this morning, Kingsmill. I very much enjoyed the discussion.
Thank you.